Hello and welcome to Markets Today. I'm Surabhi Upadhyay and we're looking at what's been an absolutely fantastic Friday for the markets. All-time highs. It couldn't get any better. Let's run you through the top headlines. Markets end a fabulous Friday at fresh closing highs. Both the Sensex and the Nifty hit record levels, up almost 1% each. Banks lead the BLITZKRIEG. The bank Nifty also hits a lifetime high, rising above 18,000. Kotak MAHINDRA Bank surges after markets give a thumbs up to the ING VYSYA acquisition. And markets brace for an even more action-packed week next time around as the winter session of Parliament kicks off on Monday. GST, insurance and land bills are likely to be introduced. Well, let's tell you all the opinion that we've lined up. The experts that we've got on the show tonight, Srivastava of Dimensions Consulting, and of course some global perspective as well coming in from Richard Gibbs of Macquarie. And of course, Lata is also joining me in the show. What a day it's been for the market, Lata. I don't know if it was the bank merger that really set the tone right, or the positivity of the FII money coming in, but fantastic Friday.
Yes, indeed, it was a fabulous Friday. The Sensex gained 250 points and at one point very close to 300 points. And the Nifty at one point came close to touching 8,500. Let's go to Anuj and get the highlights of the day's action. Anuj.
Well, what a day for stock markets today. New all-time highs. Nifty came within kissing distance of 8,500 and it was all led by banks. Bank Nifty hit 18,000 and is now up about 6% this month. You could argue about today's market move being a bit narrow, but then you would take it, really. Bulls would take it because the market saw a bit of a breakout in today's trade. Of course, led by banks, as I said earlier as well. So, stocks like SBI, ICICI, PNB, all doing well. Of course, right on top was Kotak Mahindra Bank, that was up 4%. And it had, a lot of South-based banks also did well in trade today. But it was not just banks, actually. There were some other stocks also that supported markets. Stocks like Reliance, ITC, Larsen & Toubro, these also did well. On the losing side, though, of course, you had stocks like Infosys and Sun Pharma, which were down. The short point is that, and one more point is that the mid-caps underperformed in today's trade. The index was flat and advanced decline was negative. So the short point is that the market had a breakout, but you might want to argue a bit about the nature of the breakout that we had, which was led essentially by a sector and 3 or 4 stocks. But as of now, you have to respect the screen, which is telling you that it wants to seek higher levels.
Oh yes, I completely agree with you, Anuj. The PSU Bank Index gained 2.2% today and 5.7% over the week, at a time when there isn't really any sign that their NPL stress is over or that interest rates are going to fall like a ton. This is a bit of living in hope, as it were, but then you don't argue against the tape, as you put it. Time now to get you some more market opinion. Srivastava, the CEO at Dimensions Consulting, actually sounds cautious. He expects the market to correct in the first week of January and is disappointed with the government's work in the last few weeks. Let's hear him out.
We could, in fact, instead of a pre-budget rally, my view is we may even see a correction in the first week of January, post the closure of FI books on 31st December. And the reason being that I think the slew of decisions coming out of the government have been kind of quite disappointing to some extent. If you look at the mid-cap stories, by and large, they are not with the strongest bunch of investors. That's a problem with them. Some could be fundamental stories, but most of them are speculative stories. Real estate companies, you got to book your profits or stay away from them, in my view. That's one segment which is going to give subpar performance. Certainly the North Indian companies, you need to stay away. Auto ancillaries have run the course in terms of premium to the market. You need to book your profits there. On the other hand, you said I'm in a bad mood. No, I'm in a good mood to say, do not desert pharma. Do not desert IT. If you got it there, hold it. If you have money, invest in it. These are 2 sectors which will stand you good for next 3 to 5 years. Don't desert it. But these are the sector, auto ancillaries and the real estate. I would still believe that time has come to book your profit. They have run up quite a bit, or at least not corrected enough, and put the money to work somewhere else. I think it's a good long-term buy, and there are 3 reasons for that. I think one is, functionally the equity entity will be much better. Number 2 is a lot of investor interest will come back into the stock. And the third, of course, is that the global play on financial sector in India continues to be the top bet. So till the QE liquidity comes in, financial services and banks are the number 1 bet for every single investor. So you are safe in a demand side, you're safe on the entity side. So in a long-term bet, it's definitely a good buy.
All right, that's a little bit of caution coming in from Ajay over there. Let's now talk about the futures and options space. The market obviously building up towards expiry next week. What happened today in Friday's trade? Let's find out. Nigel is joining in. Nigel?
Well, today was a great day's trade, and just looking at the option data, it looked quite good. So we saw shedding at around that 8,200 put. That was where there was some firm support for the Nifty. And in fact, now we saw writing at the 8,500 put, the 8,400 put, as well as the 8,450 put. There was writing that was seen in today's trading session. The key is going to be whether or not in next week's trading sessions we see any kind of unwinding on all this put writing. The minute we see some kind of unwinding at any of these puts, then in fact the Nifty will start sinking lower. But if we continue to see writing at these levels, then there is belief that in fact the Nifty can hold out at around that 8,400 odd mark. The 8,400 call as well, there was shedding in today's trade. The premium jumped up to around $100. So traders booked their profits. So they're all those buyers of those calls. They booked those profits, and in fact they went ahead and took a bit of a punt, bought the 8,550 call for around 6 rupees. They ended the day with a gain of around 12 rupees. So big gains being made if you bought that 8,550 call. Individual stocks that went focus. The big boy Reliance Industries came in for a short covering bounce. That aided the Nifty moving higher. But clearly today was the day of banks. And ICICI Bank as well gained close to around 3%. Big buying was seen on that counter. But traders are not going and buying any stocks, because JSPL was a stock that did get sold into even though the markets were very, very strong. Other stocks that went focus, a couple of banking stocks did see good amount of buying. Open interest as well sold up. The likes of Karnataka Bank as well as Federal Bank, both of them did see big buying in trade today. While there was some unwinding pressure seen on Hexaware as well as Reliance Power.
Right, Nigel, thank you for that. And let's now talk about the story of the day. What else can it be but this mega bank merger that's been announced between Kotak Mahindra Bank and ING VYSYA Bank? Interesting reaction on the stocks, of course. Kotak managed to close and end in positive territory with a gain of around 3.5% or so, whereas we can see ING VYSYA finally towards the end of trade dipping in negative territory. Lata, so what's the word? What have you been picking up? Lots of reactions coming in, but most of them seem to be quite positive and optimistic on the deal.
Well, absolutely, and I think this is one of the most overanalyzed deal in the shortest possible time. Well, basically, most brokerages say give you the same arguments, but I'll give you a couple of them. Macquarie says that obviously the deal doubles Kotak Mahindra's branch network from 600 odd to 1200 odd. It is an 18% equity dilution, and for that he is buying a 90% increase in branch network. So damn good price to pay. The return on the equity will dilute because ING VYSYA has a much lower return on equity, but there is a scope for improvement because Kotak's value per branch is 5 times that of ING VYSYA, and its profits per branch is twice that of ING VYSYA, which is a measure of how much you can expect improvement in the ING VYSYA branches. The 12-month price target is retained at 1,045, and the call is neutral, so no change to that. Citi has the most beautiful adjectives actually to congratulate Kotak for the acquisition. Calls it a strategic acquisition, and very importantly points out this is the last such asset available, with a national franchise and presence across all business segments. He says they point out that Kotak gets a South India presence with it. It also pushes Kotak from being a niche player who only does retail and largely portfolio management kind of services to the big league where it offers all kinds of services across the country. Priced very cheap actually at 2.1 time book compared to Kotak's own 4.3 times. It's a damn cheap price to pay going by historical valuations of comparable deals, and immediately EPS will go up by about 5 to 6%. He says, although return on equity, returns will dilute. Return on equity will dilute from about 15% to 13%, as well return on assets will dilute by about 40 basis points. But the deal itself is going to be a leg up for both the business and for the stock price. That's Citi's view. I think finally I'll quickly tell you JP Morgan, they also remain overweight. They give you a target price fairly tall, very close to the current price. 1250 is their price, and their point is ING VYSYA brings the current assets portion. Kotak does not have too much of current accounts. ING gets that piece, and it's although its current accounts per branch is less, and therefore with Kotak's presence that can be pulled up. And also the ING VYSYA brings a good SME book, an agri book, and that book didn't really find too many NPLs in the downturn. So that's a good book of loans that comes into the merged entity. So basically it is all-round thumbs up, but nobody gives Kotak a price higher than what it is ruling now. I mean, the highest I saw was JP Morgan's 1250. Otherwise, most price targets are below 1100. So further rallies from here is not expected, at least not from the broking community.
Okay, all right. So let's see how that goes. Of course, the deal was also a big inspiration for a lot of other bank stocks on the private and the PSU side. Almost all the banking stocks were on fire today. Let's move on to another stock that finally took flight, if I were to sound cliche, towards the dying moments of trade. And we're talking about SpiceJet. This is a CNBC TV 18 exclusive. Sources are telling us that the Sun Group may have finalized investors for SpiceJet. In fact, talks are currently at final stages. That's what our colleague Kritika Saxena is telling us. Kritika, fill us in with all the details.
Hi, Surbhi. So to repeat the cliche, we could see the deal finally taking off. Now, what I understand from my sources is that SpiceJet has been in multiple back-to-back meetings. The Sun Group promoters have been talking to multiple investors. They have been able to narrow down on an investor. And according to my sources, a deal could go through by the end of December, and a term sheet is likely to be signed. Now, while we do have multiple names doing the round, we haven't been able to independently verify the name of the investor. However, we do understand from our sources that the investor has pegged the valuation of SpiceJet, that is the entire company, at around 1,500 crore rupees. Now, what is undecided and the bone of contention and the reason for the delay of the sale is largely the fact that the group is undecided on if they want to sell the entire 53.4% stake that the Warrens hold in the company or just sell a part of it. The initial deal was to sell just about 12 to 14%, and that is possibly what will eventually happen, but the group may also consider a complete exit. They have been talking to players for that as well. So that is the only option that they are talking about right now. But very interesting that the investor has pegged it at double of its size, because the market value of the company stands at just around 750 crore rupees. In terms of official comments, SpiceJet says that they have been looking for options to recapitalize the company, and they are talking to multiple players. However, they would not like to comment at this stage. Remember, the debt of SpiceJet stands at a little over 1,400 crore rupees. So this will be a very significant deal to bring down that debt, given the fact that auditors have raised multiple warning signs and warning alarms.
All right, thanks a lot for that, Kritika. Okay, time now to get some global opinion. Richard Gibbs, global head at Macquarie Securities, says there's more room for revival in the Indian economy. And adding to that is Bruce McCain, who believes that the global economy on the whole is on the path to recovery.
I think what we're seeing emerging now is greater differentiation and divergence between particularly the major economies, but also through the emerging world as well. And what the key differentiator is at this point in time is the strength of domestic demand and the potential for growth in domestic demand. And I think the Indian economy will still have plenty of potential for growth in domestic demand in 2015. I also think that recent concerns about the RBI's interest rate moves or a delay in a cut in interest rates are probably a little bit overblown at this point in time, those concerns. I suspect that the interest rate cut will come sooner rather than later.
Certainly that we're going to see a continuing economic expansion. That's the driver of pushing the rally forward from here. I guess on the multiple side, though, we're at high enough valuations that a lot of investors are certainly nervous about that. And I think in order to see radically higher valuations, would need to see considerably better news than we've been seeing so far.
All right, that's some global opinion. Time for a break now, but coming up, more market perspective, and we'll also get you some trading ideas for mulling over the weekend.